Welcome back to Hitting the Bid, the place for retail traders by a retail trader. I'm your host, Jeff, and I'm here to break down market moves, share lessons from my own trading journey, and help you navigate the ups and downs of life in the markets. Whether you're just getting started or have been trading for years, this show is here to help you stay sharp, stay disciplined, and most importantly, stay in the game. Today is Friday, June 6th. Let's get into it. The S&P 500 via SPY up about almost $5.50, about 0.9% here. Been pretty strong all week despite yesterday's sell-off. QQQ up about 530, just about 1%. Again, strong all week. And then IWM up to 80, so the Russell 2000 up 1.35%. The VIX pretty much getting crushed all week, down $1.40, a little about almost 8% here. Bitcoin right now at about 104,875 or so. Really kind of made a round trip here. Similar price to when we started the week. Saw a little bit of a sell-off yesterday, but strong again today. Moving over to bonds here. I'll talk real quick about ZN. This was the trade from 2 weeks ago. So I did take that off yesterday morning for $115 profit net of fees. So just looking at it right here. So I sold it 15 ticks, sold it or bought it at 15 ticks, sold it at 23, which is $125 profit, but really about $10 worth of fees here. So $115. So I'm fortunate I did close it off based on the non-farm payrolls today, which is the reason I wanted to take it off. Yesterday, I didn't want to hold it through today's number, which it being stronger today than estimates seemed to have sparked a little bit of a treasury sell-off across the curve, pushing yields higher. I have this trend line here drawn, and you can see a pretty strong break of it, so I'm glad that I'm out there. Now just looking at ZB, down a full point here, about 0.88%. We do have what appears to be an evening star candlestick pattern. Really what it is, it's just first candle here, it's green, followed by a small bodied candle, and then a red candle that overtakes at least half of the green candle. This can be a reversal type pattern when it occurs at the end of trends. And additionally, this long upper wick from yesterday might be indicating that sellers are taking control. So we do have what could be a reversal here in bonds and maybe a trend lower. Now going across the rest of the market here, moving to currencies. British pound against the dollar here has been pretty strong all week, though it's down 0.35% today. Similar amount for the euro. Kind of been bouncing back and forth in a tight range, but again down about 0.4%. Gold down at about $20 on the day, which is about 0.6%. Real quick, we'll move over to GLD, the gold ETF. Now I have the drawing here as far for that channel. I talked about GLD again in the newsletter this week, but it really can't make a decisive move outside of this channel. So I'm not going to make any trade here. I'm just going to sit tight. I thought it was going to make a break here based on some pre-market prices yesterday, but ultimately it ended up selling off back into the channel, and we're holding in there for now. So I'll be just kind of monitoring it for now, and we'll see if I can get the price action I'm looking for in order to make a trade. Now looking at end phase from last week, so I did close this position for an $82 profit net of fees, so that's 85 here, but $3 a fee, so it's $82. Again, that doesn't seem like a lot, but a profit of $82 on $350 of the initial position is better than 20% return on capital. So part of the small consistent winners. This position could have benefited from increasing price since it was a short put, so a put that I sold. So it would have benefited from increasing price, volatility decreasing, and time passing by. So really three different ways, and any combination of them. In this case, volatility actually increased slightly, but I was able to get the direction right. So I got a little bit of an up move here, and time was passing by, so it ended up being a nice little winner. I had planned to close it at 50% uh, uh, of the initial credit, so about $90, but trying to get that last few dollars there, and I got about 45% in less than a week. I decided that it wasn't enough expected value for that last $8, so I closed it out. Now I did actually roll it up the day before yesterday from the 35 put to the 40 put. So I ended up buying back that 35 put and selling back the 40 put for $1.63 credit. And really, I was just looking to capture a little bit more extrinsic to try to get, because of the momentum here, I just wanted to get to my profit target faster. Now for today, we'll be looking at StarBucks. So that is ticker symbol SBUX here. It looks like it has gotten some positive momentum this week, breaking out of this range right here. So here's the top side anchored by this swing low right here, and then the bottom of the range anchored from this swing low. Now there are a couple of levels that I'm watching above the current price. One is this April 2nd gap here at $97.41, so the red line. The other is just this congestion area highlighted by the blue rectangle, which is encompassing a lot of the price action since September of last year. These levels could serve as some kind of resistance, so if we make it there, I'll be watching it closely to see if I need to close this position. But with IV rank at about 15, I'm going to go ahead and go to the 42 days to expiration, so the July 18th expiration. I'm going to structure this out of the money long call spread that's long the 90 call and short the 95 call. And it's $1.84, so $184. That's what it's going to cost me. So it's risking one to make almost two, but with a probability of making 50% at about 56% here probability. I believe this trade has the value I'm looking for. So I'll look to close this trade if I do make about 50% of initial profit, which will be about $85, $90 or so, or at 21 days to expiration, whichever comes first. I'll also be monitoring for the break of this trend here, or potentially a strong break of the prior bar's low. But really, if we start to see this uptrend broken, I'm going to look to close the position. So I'll go ahead and enter that one in. I'll enter it at the mid price here at 182. We'll see if I get filled. It doesn't look like it, so I'll move it up a couple ticks. So I'll go to 185. We'll see if we get filled there. And there we go. Looks like we're filled at 185. So I'll see how this goes over the next couple of weeks. But that's all I have for this week here. Thanks for tuning in to Hitting the Bid. If you enjoyed today's video, don't forget to subscribe, leave a review, and share it with a fellow trader. You can also sign up for my weekly newsletter at news.hittingthebid.com, where I share market insights, interesting tickers, and practical strategies to help you grow as a retail trader. Until next time, trade small, trade smart, and keep hitting the bid.